Hello, folks. Welcome back. This is S&P 500. Yeah. So this is a 5 minutes chart. Yeah. So and here we have a new week opening gap. That is this area here. Then here we have consequent encroachment. That blue line you can see there. That is consequent encroachment here. You can see here. This yes, I've said that this is new week opening gap. See this one here. This consequent encroachment. Market traded lower, traded higher again. After that, to the area of consequent encroachment. At that area, we have this notice buy side liquidity. There's a violation of that buy side liquidity here, and this one here. What do you see here? What's this? Very big liquidity run and fair value gap. This area, you see this low of this kind of stick here? There was a good market delivery to that area here. This low here. After that, market traded lower to the area of consequent recruitment, to the area of consequent encroachment. Market now traded higher. You see here, the market reached exactly to that area, half of this candlestick here. How about this candlestick here? The market traded higher, consolidation lower. Again, half of that candlestick. Very sensitive area in the market. After that, market traded higher, reached to this high. Then after that, traded lower. Then market traded lower to this area. Again here to this full area now of new week opening gap. And after that, market traded higher a little bit. Consolidation. Then market traded higher. Filling this gap. What do we have here? Withdraw. Sorry. Open close of that candlestick. See the close of this candlestick. There. Oh, sorry, just a little bit. You see this area here, so is very, very crucial area. After taking this sell side liquidity here, the market traded lower. Yeah, so let's check this one. So from this area to that low, there, it got filled this fair value gap. Yeah, so this fair value gap. You see, This could not complete the assignment of filling this area. It just reached to this order block. See this order block here? There, to that area. Yeah. Consolidation, trading lower to the new week opening gap. Then after that, the market traded higher to this area. Again, traded lower to the area of consequent encroachment here. After that, now, sorry, after that, now, the market here traded lower again to the area of consequent encroachment. You see this order block? This one passed through it to the above that. Then this one here filled that gap, taking this high. See this high from here, this area. So it gave us an optimal trade entry here. Let's use the bodies. Let's use the bodies of these candlesticks. Only the body, the candlestick there. There we go. Sorry. The bodies of candlestick. It gave us an optimal trade entry. Let's use the wicks of the candlestick here. That area. And this one here. Here we go. This area. So after this area here, optimal trade entry, targeting this high here, and that's where it reached exactly to that area. See? Then after that, market, let's zoom out something here. After reaching to this area here, what do we have here? Fair value gap, consolidation, market traded lower here to this area, then traded higher to this area. What do we have here? Let me show you something. What do we have here? This candlestick, just a wick that is elongated to the lower side, and this one wick that is elongated to the higher side. Then half of this candlestick is consequent encroachment. That is what we call implied fair value gap. What's the half of this here? Right? And half of that one there. Let me put it into yeah, that one is okay then, but this one, let me adjust this one to that one. Yeah, so here, this is what we term as implied fair value gap. Implied fair value gap. Yeah, there it is. So after this, market traded this way here, I don't want to see after this market trading lower. I don't want to see this market trading higher below above this area. So this area, you can see this week traded lower, but the body of the candlestick speaks everything. The wicks of the candlestick manipulates everything, right? The bodies of the candlestick speaks everything. The wicks of candlesticks manipulates everything. So this is a rejection. You see the body of this candlestick, and this another one, this candlestick. The rejection. You see to this area. This is now what we term implied fair value gap. Oman saw that. And this, what was the time here? The time here was lunch break. No, it was after lunch break, New York time. Yeah, that is implied fair value gap. And let's check. This is 1 minute chart to the place of implied fair value gap. You see even the rejection in lower time frame, 1 minute chart to that area. Is it working? Yeah, of course. It does. It works. Check the bodies of those. I want to check the body of this kind of sticks there. So here, this area, implied fair value gap, there it is. Rejection is happening here. Let's check to 5 minute chart. You see, from this week, low, optimal trade entry, implied fair value gap. Then after that, what happened to the market? Traded lower. Exactly. After that, market traded lower. Checking this, buy sell side liquidities here. And after that, it passed through the new week opening gap. So traded lower, taking this sell side liquidity here. Taking that area, traded lower. This manipulation, accumulation, manipulation, distribution. And you can see right now we are in distribution phase. So that's what happened yesterday here. After this New York zone here was full of consolidation. So, and here, first here, what do you have here? This buy side liquidity here. They are resting in that area. So, those how things are. Let's take to me. Okay, let's take to 1 hour chart. And guys, this strategy is the best strategy you can ever have, and you can ever practice. In 1 hour chart, let me remove this. Let's remove this one here. You see this low here? What do we have? What do we have there? The market here filled fair value gap there. The 15 minutes chart traded lower to that area, creating equal highs, trading lower to this area, to the half of this area. What's the half of this area? Possible encroachment there. This candlestick here. From there, a drop. Middle of the candlestick is there. Consequent encroachment, taking sell liquidity. After that, you have a rally of bullish momentum. And you can see here, you remove this one. This one. You can see here is the target for the fair value gap close. Here we do our fair value gap, right? And here. And there. And you can see the market is still walking to that area, right? Yeah, so we want to space the market to reach to this area, and me write this one. This is a fair value gap. This fair value gap. Remove this one. Bring the chart. And here we have buy side liquidities pressing above this area. This buy side liquidity. You have buy side liquidity for that area. This is fair value gap. That is fair value gap in 1 hour chart. What about in 15 minutes chart? Do you have anything there? We have a runabout liquidity void here. You see? From that area to this low. You have a run of liquidity void. In 5 minutes chart, here. So it is a downward momentum here to that area. But when we check to the higher time frames, we have something to trace on, right? Yeah, so until next time, I wish you good luck and good trading. Yeah, bye for now.